Hi, everyone. It is Danielle Marie from the One Realty here in Austin, Texas. I'm the founder of the One Realty in Austin, Texas, where we take a data-driven, all-in-one approach to real estate. So thank you so much for joining us. And we have some exciting news if you're a seller. There's also some great news out there if you are a buyer. So what we are going to hop in today, we are going to talk about the Austin real estate market and the changes that we're seeing as far as what are buyers, what are sellers doing. So without further ado, I am going to go ahead and I am going to go and share this weekly's update. Now, with that being said, if you are joining me, feel free to subscribe or follow to get more information on the Austin real estate market, or reach out if you have personal questions on your area. With that being said, we are going to hop into where Austin's real estate market is. So first and foremost, this is completely expected, but maybe it's a little earlier, is that we have started to see a downtrend in our number of active listings. So we are down week over week, 80 listings have gone down. Now, that's also going to be people withdrawing listings, houses going under contract. But if you look at this, we're down 80. However, our total decrease in listings based on people holding, withdrawing, or expiring was 193. With that being said, we also had, as far as new listings, 235. So we are going to see a continual decrease in the number of listings. That typically happens unless something happens and the market spikes back up and all of a sudden buyers are active and sellers hop back in. With that being said, our average and median prices, not real much change here. Our average price, we actually hit our peak. It was actually in February. It was like 1.233 million. Our median hit our peak in April. It was like 799. So that's a big jump down. That's also a good idea. That is good news for my buyers out there as far as when it comes to affordability. Now is 650 affordable to some people? That's a whole different conversation. But seeing that downtrend, that downward pressure. That being said, we are seeing our average and median days on market continue to go up. So you can see we rose by 3 days. So our median house has been on a little bit over 2 months. Our average house has been on a little bit under 3 months. That being said, if you are selling your house, keep this in mind. If we look straight down here, so these are what's currently on the market. If we look down here to see when listings are put on hold, when they're withdrawn, and when they're expired, you're going to see we had 193 total. You're going to see our median days on market for what was put on hold was at 74. Our median for withdrawn was at 89. And our median for expired was at 91 days. So people are doing like 3-month listings. If you're looking at this data right here, now we have to get micro into what neighborhood you live in. You want to get micro into that because that also might be changing as far as time on the market for your house. So keep in mind, look at your micro market. If you don't know your micro market, please reach out. That being said, we had 19 fewer listings with price reductions. However, because we dropped down 80 listings, you can see our percent of listings with a price reductions, it increased. We are back over 60%. We're at 60.48. Last week, we saw this kind of trend downward. This week, it popped back up again. That is normal. I fully expect that the percent of listings with the price reductions to continue to increase. Typically, it's going to continue to increase all the way through December. Now, that being said, if interest rates continue to fall. So right now, for the Mortgage News Daily, we are at a 6.53, and that is the lowest we've been since the beginning of October 24. So that's pretty big deal. If you were with us and you followed me last year in September, we actually got to our lowest. If you were to go over the past year, September, we got down to a 6.12%. Now, this is for a 30-year conventional. If you are VA, FHA, 15-year, jumbo, it's all going to be different. I'm just giving you a baseline. We talk specifically about what you're looking for based on your needs when you are buying and selling. That being said, we did see 235 new listings come to market. That is 35 fewer than last week, which we're going to kind of expect to see it tapering off. We're still going to see new listings, but we're going to see it taper a little bit. We'll also see probably a decrease in the relisted new listings. So out of the 235, 38 of them were relisted, meaning they had been on the market for longer than, for shorter than 90 days, says it came back on the market. So that being said, if you're taking your house off on the market and you're going to relist it, I would normally say I highly recommend you waiting 90 days to reset your clock and also to see what's changing in the market. If you just took your house off the market, we're not seeing dramatic increases in buyers yet. So I would say take a pause. Don't rush to put it back on with a lower price. Take a pause and see kind of, hey, what's going? Are we going to be trending upward? Are we trending downward? Also make a plan. So one of the things I'm big on is a strategic plan in regards to when you're listing based on the demand in that area and for your specific house. Going forward, if we look at our average price of these new listings, they're down. So you can kind of see, hey, maybe it's an affordability thing of these new listings coming on. They know they have to be competitive in a market where houses are sitting 2 to 3 months on a median and average. Going forward, here is my, okay, so I wrote, hey, alert, something's changing in Austin. And so up at the beginning, you're like, that's not really good. But the active listing information is not a leading indicator. Your leading indicator is your pendings. Sold data is too old because sold data, it probably went under contract 30 to 45 days ago. Your pending data here in Austin, that is going to be your leading indicator of what we're seeing in the market. With that being said, I'm about to jump into that and I'm going to share it. And if you're watching me, feel free to save this or share this out to other people so that they can find it. My name is Danielle Fountain. I'm the founder of the One Realty, where we take a data-driven, all-in-one approach to real estate. Now, for our pendings, this is the great news. So for our pending listings, we are going to see right here that we jumped up 46 more pendings than we were last week. So last week, our pendings was at 817. We went up to 917. This is phenomenal because we've had a really, really, really slow year. The fact that we had almost a 0.5% increase, actually it is with 46, 0.5% increase going into the fall, that's good news for sellers. It's also a, hey buyers, just kind of be aware. Our new weekly pending, so this is the total number of houses that went pending, and I look at it from Wednesday of 1 week to the following Tuesday. And this is because typically by Wednesday, anything that went pending over the weekend is already marked. And so we're starting a new week. That being said, we saw 194. We're increasing. If you look at this, if we go back 194, last week was 188, previous time was 178, then 190. The last time we were at 194, and I really want to show this. Okay, here's 206. We got this, and this is for 1 week in June. And then if we keep going in that June, we kind of have some Junes, but then right here, it kind of all trickles off. We had 2 weeks of really positive data in June, and it falls off. So with our pending listings, this is, I say, good news for selling. Pull it all back over here. This is great news for sellers as far as we're seeing buyers. This is also my, hey, buyers beware. I'm not urging you to jump back in the market. What I am urging you to do is if a house comes on the market that you like, please, please, please pay attention because we are seeing our pending numbers right here have increased. This is not normal time of year. I started keeping this data manually and tracking it last year. And what I want to hop onto and I want to show you is where we are pending right now. So if we look, I keep track of, not only am I keeping track of the pendings, so this is the new pending, this is the week, Tuesday, Wednesday to Tuesday, the new pending listing. So how many were new pending? What was the week over week change? And then what was Friday's 30-year interest rate? Because that plays a huge part in it. We can actually see an increase in the number of pendings when rates drop down. So if you look right here, and we're right here at 194, and you start looking like there's a lot of weeks until we get to June. And here's where our 2 Junes that were over 207. If you look, June, majority of June, July, August, we stayed below it and it's really high. This is good news. Now you can see this is a 6.57. If we go back over here and we see, hey, when we fell like the 6.7, 6.6s, we saw this hop up in April. So the fact that some of our numbers right now at 194 are so close, that just says a lot about our market. I'm also seeing from my side, I've had a bunch of investors reach out, and our investors have kind of been quiet the past couple of months. Now they're kind of dipping their toe in. So that is very, very indicative of what I'm starting to see happen. And I am not one to blow smoke. Well, they say don't talk about negative because it's what you are. But if you follow me, I'm giving you data. And I'm also telling you, hey, when I see the market trending down, I'm telling you. I was talking about the number of increase in the number of price reductions way back in March and April. I was seeing the pause in the market and we talked about it. Now, also, if you're joining me, feel free, if you have a question on the data that I'm presenting or question at all, I can look at my comments and see it. So feel free to leave a comment and I can get back to you with your question. So if we hop back into our weekly data, you are going to see here for our average price and our median price, week over week, we're dropping down. Not a surprise at all. What I also like to compare this pending data to is I like to compare it to our average sales price. So you're seeing our pending numbers right here. It's 829,000 and our median is 630. It's lower than what our average and median are currently. This is kind of, when I say a leading indicator, when we start looking at sales data and we start looking at sales data for where we're going to end up in August and even September, when people are like, hey, are we increasing our prices? Are we lowering prices? What's happening in Austin? Well, this data right here is telling me, hey, we're probably going to see prices continue to fall throughout the year. This is very important. It's also seasonality. So we typically see starting in June, July, we see prices knock off. One, buyers typically are leaving the market, but here we're seeing some. Number two, we're also seeing an increase in the number of listings with price reductions, which we saw above. So we saw it right here. We saw this increase by almost % of listings with price reductions. Sellers that need to sell are taking movement to sell. So we're seeing that right there. With that being said, this is also kind of something I like to look at to see, are the listings that are going pending, are they listings that have been sitting for a while, which you can typically see with the number of listings with the price reduction, which is interesting. The number of listings that went under contract with a price reduction, it decreased. So right here, negative 0.76. So 0.75% right here, especially when the number of listings with a price reduction have increased, you would think this was increasing. But then we also go back here and we look at average days on market and median days on market. And what I'm looking at right here is I'm seeing a reduction in the median days on market. Well, if 917 of them are pending, and week over week, so we had 194 of them go pending, the fact that we shifted down by 2 days, this means that either new listings, when they're coming on, they're moving quickly, because you're not also seeing this increase in the prices. So if we saw an increase in homes with price reduction and continue to go up, that meant that older homes as well are sitting on the market, and that's what's going pending. When I start seeing this, that means that we have buyers that are out there and they're waiting for the right property. I can tell you I have buyers that are that way. We're looking in our off-market properties. We're looking at new construction coming on. We're in real estate forums and we're asking, hey, who has properties that are coming up that haven't hit the market? Just because there is market out there, but what they're specifically looking for in that niche that they're looking for, it's not on the market. So if you have a house and you're bringing it to market, do also research to see, is your house a niche? What is going on with that? So if you also followed me last week, I talked about our new listing that we just had come on the market. And normally open houses, you get 2 to 3 people that come through it. On our Saturday open house, we had 6. On our Sunday, and I'm not even kidding, we had 12 groups come through. Now, we've had some come back. We have people circling. We're not in a market necessarily where people making offers the first day. Sometimes they are, just depending on the house and the demand in that area. This area, the demand isn't as high. However, it's a very niche house. That supply of houses, it's not there. Really, really cool. It's a golf course house, 8704 Balcones Club Drive. If you want to see more about a golf course lot house in Austin, that's fully renovated and remodeled, reach out and I'll share that with you. So with that being said, we did talk about our listings with price reduction has dropped down. Stay with me. If you stay with me, we're going to hit July's numbers and we're going to hit August's numbers of here in Austin. Now, it's all preliminary, but it's where we continue to track things. Once again, if you're just joining me, feel free, give me a follow. Also, if you share this, whether it's on LinkedIn, if you're on X, and my handle on X is @the_1_realty. You can find me. I talk a lot of data. this is just my big weekly summary, but we dive into little areas as well. With that being said, where are our close? So in the past 30 days, it's not a huge uptick, but it's an uptick. We went up by 9. So week over week, we had 9 more properties go closed. It also is going to change, like if you get rid of a holiday, different things like that. So as we pass July 4th and all those days, our number probably went up too because we had one more business day with that. Now, our average sales price, median stayed exactly the same. Our average sales price, it did pop up. So that's a trending, it's a slight trend upward that we're seeing, as well as down here. This is the first time I've seen the close price to list price. These numbers have been negative for quite a bit of time. And when I mean negative, it's week over week, the ratio of close price, so what someone pays for, compared to list price, which is current price, and close price to original list price, what it was listed for before there was any price reductions. We've typically seen that percentage, that ratio, continue to go down week over week. Now, this is the first week in a while where I've actually seen any slight positivity of it going up. So that means that maybe it's houses that are getting on the market soon or are going under contract. I had a house that we wrote an offer on 3 weeks ago. It had multiple offers after being on the market for 118 days. So wilder things have happened. With that, you're going to see our average days on market, our median days on market. Yes, it increased. We're going to probably continue to see the increase for the sold data because leading indicator is we're looking at our pending. So our average days on market and median days on market, here they are, 64 and 45. That's going to all go up to 64 and 45. Like, we're going to see that unless these numbers start dropping down. There is no mathematical way. There's not like you over offer on a house and you're going to see these days go. That doesn't happen. So unless these numbers go down, these numbers are continuing to rise. So I'm not really worried about these numbers. Average days on market, median days on market for sales data does not, now people are going to shoot me for this, does not matter. What matters for days on market is going to be your pending. This is really what's going to tell you the story of what's happening in the market. If you're listing, this is going to tell you, so the active one right here, 87 and 68, that is going to be your story of what's currently going on of your competition. Once again, this is general Austin data. If you are looking in Austin, please, please, please reach out and let's talk about your micro niche market. Every area is different. If you are looking in Tarrytown, if you are looking in Allendale, if you are looking in Northwest Hills, if you're looking in East Austin, if you're looking in Circle C, all of these areas have their different markets. I am just giving you overall for the Austin single family homes market. I highly, highly advise you, and I see it all the time. You'll see like the Austin, when I say Austin, it's the greater MLS, the whole Austin. Well, that includes Buda, that includes Gerald up north, that goes all the way down to San Marcos. Those are completely different markets. You need to be honed in to Austin. And even within Austin, you need to be honed in to your specific zip code or neighborhood to find out. So I will get off my soapbox. I appreciate that. If you can't tell, I'm a data nerd and I love it. I mean, I'm just a big Excel sheets excite me. And it is what it is. So with that, we're seeing, so we talked about, hey, little price shift. Now, here's where we're going to get into the nuts and bolts. And I'm going to hop over and we are going to talk about where we ended up in July and where we're going in August. Now, once again, if you have any questions, feel free to leave a question below. Save this if you're on X, you can save it, or favorite this if you're on YouTube, so that you can find this again, because let me tell you, sometimes I find an amazing video on YouTube and then I can't find it again. So just bookmark it and then you can come find me. So with that, I'm going to hop over into our monthly numbers. So lots of information here. Don't be scared. I will take you through it. If you want this information and you want to say like, hey, I want to digest this a little bit more and I want to see what's going on, either A, we can hop on a Zoom call, or B, I can also share this specific information with you. So right now we are going to be looking at July's data. July, once again, I say it's almost outdated already. It kind of is. because we're already looking at pendings and we're looking at August, but I think it's important for you to know. So first and foremost, this is like a, hey, good news story is, okay, good news relative to the year. So for July, what we've reported so far is 735 closings. I said a couple weeks ago when I talked about these numbers that I expected it in the mid 700s. That's kind of where we are. I wouldn't be surprised if we get closer to 750. People report things late, but the big news is we beat last year at 719 and we beat our lowest year of 2010 at 712. I mean, these aren't great numbers, folks. These aren't crazy numbers. It's a little bit better, but not great numbers. That being said, if we looked at our 20-year average and our 20-year median, you can see we were closer to around 1,200 houses. So this is a big drop off. This also means that we have lots of demand that's probably stored away somewhere, whether people decide, hey, I'm going to rent instead, I'm going to wait for interest rates, which there are a lot of individuals like that, as well as we haven't had investors in Austin. Our investors kind of disappeared, but I'm starting to see some work with it coming back. And over here, you can kind of see, here's our historical average. We are underperformed by almost 40%. So I say 37.55. Historically, that's 442. That means there are some pent-up buyers in here. With our average sales price, $815,000, and our median at $633, what I'm looking at here, what you're seeing on this chart is you're seeing where we are in July of 25, and this right here is year over year. So this whole section right here, we're comparing to this section right here. So we're comparing it to July's data of 24. Here, what you're seeing is, so you're seeing, yes, we closed 2.23% more houses this year. We're also seeing, now this is tiny, like $397 more for your average sales price. That might as well be negligible at that point. Our median price, you can see our median price did go up 16,000. So that's a pretty, I mean, that's 2.59%. That's a good little deal for it. Our square footage, very, very similar. Our days on market actually slightly went down, which is kind of surprising. But this shows you that buyers this year in July were more active than last year. Now, here's where my big kicker is. So all of those closed price to original list price ratios that we talked about, last year in July, sellers were getting closer to their list price, both current list price and their original list price. If you look across the board, we were down about 1%, give or take, 0.8 on your averages and 1% on your medians. It was slower. We're going to go back and we're going to look at August, and we're seeing where we are in August. The next thing I like to look at is where are we month over month? So this is what I'm doing is I'm looking at July 25, and down here, I'm looking at June 25. So I'm comparing these two right here. And so if we look at June and where we are in July and where we are in June, we closed fewer homes in July than we did June, which is normal. Historically, we see the closures drop off. We did see month over month, our prices decline. So in Austin, if we compare where our peak prices were, we closed at a higher price point in July, or in June than we did in July. Historically, as we go seasonality, we typically see it maybe a little bit later in the season. We will most likely, unless interest rates drop enough to spur back buyers, we'll probably see we already hit our peak price for the year. So if you're buying, I always tell this, people will get on Zillow, Realtor, all those places, and they'll look in November and they're like, oh my gosh, I lost a ton of equity. Well, if you go back and look at any house, historically, typically you'll see it decrease, and that's just because demand goes down. So when demand goes down, it also plays into the algorithm of what people are willing to pay for your house. Keep that in mind. What are they willing to pay? So I say, if you're going to look at the price of your house, try to look at the same month every year and compare that month year over year. That's really going to be your best bet. Don't compare in February to November, or if you're looking in December of one year and the following year you look in June, you're probably ecstatic. But just keep that in mind. Your price is really going to change month over month. With that being said, we saw it drop down 3% per average. Our median is slightly down 0.31 for that. And then the other thing that we saw over here, and we talked about it up here, is we saw our prices go down overall as far as your closed price to original list price. Now, interesting enough, this was interesting that this didn't change. Our month over month as far as our closed price to original list price, the median, interesting enough that didn't change. So in July, or in June. So we were at 95%, and then we are back at 95% in July. And I just think that that's, the market kind of took a big pause. So it's like the market took a big breath here in Austin, Texas. Now, the other thing I like to look at is we've talked about year over year. We've talked about month over month. So the kind of year over year is far apart, month over month. And now I want to look at year to date. So I want to look at where did we end up in December and where are we looking for the year? Because people say, you know, is the market going to be up or down at the end of the year? Well, we're really going to have to watch it through, because midway through the year was like, oh, it's going to be phenomenal. We're going to be up 8-10%. And I was like, no, I don't think so, because we typically fall. And so right here, when I'm seeing my month over month be negative, that's going to kind of give me an indication. So right now, year to date, this is July's numbers. We're about to hop into August. So year to date for July, we've sold 68 homes more than we did in December. Guys, ladies and gentlemen, that is not a lot. Just keeping that out there is that if we pick up, which I truly expect us to pick up, because let me show you one little part. So if we go back to our weekly numbers and we see this pending of 917 and how it popped up, if we go back and we look at, so I'm going to go back to, if we're looking at July's numbers, it's going to be where we were in June. And I'll just go like beginning of June where we were, I say June and July. So you're going to see these here, 950. If we're looking at, so 88, they're all dropping off. So we're going to see those numbers related to what is pending. With our pending picking up, we're probably going to see our pending get a little bit stronger as we go into August for our final sales in our August numbers. So with that being said, the average sales price is down 1.24%, meaning the average price of homes here in Austin, I would not be surprised if our average ends up slightly negative for the year. Now, here's the other part, our median. So our median price, we're up 3.77%. Averages and medians are important. They're extremely different. We have houses in Austin that are 23 million that have sold Emma Stone. And so sales price not disclosed, but you're going to have houses like that. And then you're going to have houses that are your starter homes that are in the 300, 400,000. Two completely different houses. We have a lot more at the lower inventory that is selling, hence why our median sales price is lower. So our average might just mean that we just don't have some of the higher price points homes. They are sitting longer. My buyers that are looking above 1.5 million and above, the inventory is stacked. So if you are open to houses and there's not very niche criteria, you might have a better shot getting a true deal in some of those higher end markets. With that being said, so our average price point set from December is down 10,000 right now. And that was from July's numbers. And you can see our median is up 3.7%, as well as, this is the other thing to keep in mind is, so our average days on market, you can see our average and median days as far as like what closed out. You can see that in December, it was 27, it's 27 and 19 higher than what it is now. And if you look at where we are as far as like our pending data, we're probably going to get to, when it comes to August, we might be very close to days on market, very similar to where we were in December. So keep that in mind. The other thing is this right here is going to show you closed price to original list price. We are very close to the percentages that we had in December, meaning the month that we would be making, sellers are making tons of deals. So it's November, you're making offers, you're making lowball offers, you're saying, hey, I can close before the end of the year. Sellers are like, great, let me just get out of here. If you are looking at this right here, you're going to see we're very close. So what I'm seeing in July, now we are going to hop into August data. If you're just joining me, my name is Danielle Fountain. I'm the founder of the One Realty here in Austin, Texas. We take a data-driven, all-in-one approach to real estate, hence why I like to know my numbers. I like to know what we're looking at. This is the macro market. This is Austin as a whole. If you're looking for a specific area, we need to dive into your micro market. With that being said, we are going to hop right here into August. Now, oh gosh, well, hold on. I know this, it's not 7:02 because I just pulled it up earlier this morning. Oh, that's, whew, gave myself a heart attack because I didn't pull it all the way up. Okay, so disregard that. It is 265. I said, wait a minute, that's not right. But that's not right because it was last year's numbers. So you can see 702 was last year's numbers as far as the number of houses closed. Our lowest we closed was in 2010 again at 648. Now, I can tell you right now, because our number of pendings are going up, I have full confidence that we will beat the 702 this year. I think that we'll have a stronger August than we did last year. I think we might also have a stronger August than we did July. And that just has to go, once again, back to interest rates. So if you look at where we are right now, this is kind of the shocker. People are going, oh my gosh. If we look year over year in August right now this is only 265. So significantly less, 30% of the homes have sold, or what is going to sell this year. So let's say we're at 30% mark. These numbers are going to shift. What we are seeing right now is we are seeing this average sales price is going up. So you see this is at 881, 54,000. Now, keep in mind, if we go back to our weekly numbers and we look at our weekly pending is down, both average and median price points. So median is at 630, average is at 829. That means it's probably going to affect these two numbers unless we're getting multiple offers and over. Highly doubt it. So I don't get excited about this yet. I would probably see this. We're probably going to be closer to like this 830 that we're seeing right here. Would not be surprised if it's very, very close. So this was data from 24. You're going to see right here our average price point and our median price point. We're up. It looks phenomenal, but we're so early in the month. It's not going to get the full story yet. The other thing that we did see is that the number of days on the market are creeping up. Totally expect that. But this was the shocker again. So when we went back to our weekly data, I said, hey, right now at close price to list price, we saw that average up slightly. That was interesting. If we go to our monthly data and we compare year over year, this is higher. People are closing out closer to list price, which is kind of like it's a, hey, sellers, pay attention. Are buyers buying in your area? Buyers, pay attention. Is there a house that comes on the market? What does that mean for you? So you can see year over year, nothing really changing as far as these price points. If we look at month over month, you're going to see a huge increase in our prices that we're seeing that 8.1%, 0.32% going up. We're also seeing month over month. So if we're comparing this to where we closed out in July, once again, we're seeing positive change in our close price to list price. Finally, if we drop down to our year to date, we are also seeing our year to date, it's up by 6.78%, and our median is up by 4%. With all of that being said, it goes back to if rates drop, we are probably going to see more activity come to market as far as buyers come back. If more buyers come back and the supply continues to go down, which is historically like what happens, we're going to maybe see a little bit more competition because people, especially when rates are kind of high, people take their time looking. It's like, I'm not going to miss the house because the rates are high. I'm going to wait for the right house. When rates go down, there's also a demand from buyers going, oh gosh, there's a lower rate right now. I've got to find the house that I want. I don't want to miss this rate, especially because we've seen rates kind of go up and down. We don't want to miss that. So a little bit different, I say, of kind of what is happening. Really, truly, we're going to tone in and we're going to find out. And I'm watching. If you're joining me weekly, this is important. We're going to see, is there any changes? I will also say, historically, when the Fed lowers rates, interest rates typically have it already built in as far as the reduction. So, and people are always surprised at this, and it has to do with the bond market. But if we see the Fed lowering the rates, don't be surprised if interest rates kind of go up a little bit. And that's just, it is what it is. It happens. It's almost like interest rates are built in advance. So you want to be aware of it. So with that, my name is Danielle Marie from the One Realty. I'm the founder of the One Realty. So actually Danielle Fountain. You can find me at www.theonerealty.com, one spelled out. Or you can find me on X at _1_realty. You can also find me on Instagram. You can find me on pretty much any social media site. I'm at Austin Real Estate on YouTube as well. But thank you so much for joining. Be sure to share this and save this so that you can find it again. If you have questions specifically on a specific area where you're looking to buy, or maybe your own property, maybe you list your property and didn't sell, and you just want someone to take a look at your property and kind of give you some feedback on it, I'd be more than happy to do so. feel free to reach out. My information is below if you're watching on LinkedIn or YouTube. So with that, if there's any questions, feel free to leave them up here. If not, I will be looking forward to joining you all again next week for our update. Have a wonderful day.